Good morning, ladies and gentlemen. Again, a very warm welcome on Business Today Television. We are on the second day running within September in gains. 117 points higher on the Nifty, 24,750 is where the bulls are battling bears at this point of time. Monday was also a session in which the sentiment was extremely positive on Dalal Street. June, July and August have been painful. So September starts in a swing trade towards positivity. Of course, lots of other developments are also helping Dalal Street, in particular the GST rejig which is on way, that might boost sentiment for shopping, for demand, for volume in the coming 1 or 2 months. And of course, there is Diwali and there is a lot of festival mood across the nation. All that also getting reflected on Dalal Street. The Bank Nifty 124 points higher, a bit of a green tick on the Nifty IT index. And in terms of record highs, these are the stocks that are trading at fresh peaks. From the auto space, Ashish Motors 6,321, good monsoon, as also reduced prices via the GST rejig, and of course a tax cut earlier is helping two-wheelers. Uno Minda also from the auto ancillary space, Anand Rathi from the wealth management space, and HBL Engines Engineering from the railway space are all at fresh highs. To discuss the course of where the market is headed and what all could be positive surprises, we are now joined by Mr. Ashish Chaturmohta, Managing Director for the PMS business at JM Financial Capital. A very warm welcome to you, Ashish ji, and of course festive greetings. Lots of positivity in the market after a deep correction in June, July and August. How do you see sentiment on Dalal Street at the moment?
Good morning, Shalji. Festive greetings to you and the entire to all the viewers of your show. As we all are aware, we have been struggling with a lot of uncertainties on the macro front in last couple of months. But from a market perspective, the good part is despite a lot of these uncertainties, markets are trying to form a very good base above its 200-day moving average, and with lot of India specific macros which are improving. So for example, we saw our PMI manufacturing index above 55 levels, and we have seen the GDP coming around 7.8%. We have seen that obviously the GST collections have remained very stable in nature, and to support the liquidity, we have seen the SIP inflows hitting a new all-time high. So all this is kind of supporting the broader market sentiments, and going forward, we believe because of good monsoons plus a very strong expectation of a good festive season because of the recent GST reforms which we are going to see the rates coming to 5 and 18%, eventually improving the overall consumer sentiment. And obviously in the budget we have seen the tax ops for income till 12 lakh levels, so that is also going to create a lot of positivity from the consumer sentiment perspective. So all this is getting reflected into the consumption, into the domestic related themes, and into the new age businesses which are a good proxy to the good consumer sentiment.
Right. Ashish ji, let's come to the meat of the matter as to what changes have happened in your portfolio over the last 4 or 5 months. Where have you used this opportunity of falling markets to add fresh positions or new stocks at your PMS?
So definitely we have added into certain names in our existing stocks and construct of the portfolio. But apart from that, there are some significant higher allocation we have done to certain themes. For example, the entire new age business or new age theme is something where we have increased our overall allocation. Earlier we used to have stocks like Eternal, which was a erstwhile name known as Zomato. But apart from that, we have entered into positions like Delivery, Paytm, Nykaa, and even something like Ola Electric, or a platform company like Car Trade. So all these companies we have added the position and the overall allocation to this space is reasonably high in the portfolio at this point of time. The reason is very simple. Post the IPO, we have seen these stocks have seen a massive amount of correction, and for after correcting for good 1 to 2 years time frame, now we are seeing some strong base formation happening and in the stock, and these base formation is also coinciding with most of these stocks talking and the company's commentary and management guidance towards improved path of profitability, and which is resulting into increased investor participation into these names. And that's why we believe that this overall space looks very, very promising. For example, a company like Delivery, which has posted its margins towards 6.5% from 3.9%, so there is a very improved operating margin profile which is getting reflected into the company. Company has also done an acquisition of an of a company called Ecom Express. So because of that, I think there is a very strong improvement in the leadership position for this company in the entire logistics space. So I think this is one reason which is also getting reflected into the price behavior of Delivery, which has been consolidating for a very long time and given a breakout on the monthly chart above 460 kind of zone. So all this is indicating that a strong price action could be seen in stocks like Delivery. Same is the case with Nykaa, which has given very strong guidance in its recent analyst meet. So I think that's also getting reflected into the price behavior of Nykaa. So we can say that entire new age is something which looks very promising. Apart from that, we have been always vocal about the entire electronic manufacturing service as a space. So just to give you a perspective, this entire industry is growing at a 35 to 40% kind of CAGR in terms of its top line growth. There is a margin improvement because of value addition is being seen. So for example, Dixon, which used to do 10 to 15% kind of value addition in the entire mobile manufacturing, now the value addition has gone almost towards 35 to 40%, and with 35 to 40% kind of top line growth, we are going to see significant improvement on the margins front. And this is again getting reflected into the price behavior. When this entire fall in the broader markets were coming, these stocks were showing very strong relative strength against the broader market. So I think the entire space of EMS, which includes names like Amber, Dixon, Sirma, Keynes, is looking very, very, very strong from both from a fundamental as well as from a technical perspective. And as we follow the concept of both fundamental and technical put together, we are watchful of these trends, and looks like this trend looks very promising in the medium term perspective.
Okay. Okay. So what is very clear is that the new age part of the economy is what is enthusing Ashish ji. Therefore, the entire internet space is added to the portfolio or even to previously existing positions. And of course, the EMS space, which has given very, very strong multi-bagger returns over the last 5 years or so. Local addition, rising margins, and of course rising revenue are hallmarks of stocks that might give above market returns as far as prices are concerned. Ashish, one space that the market is grappling is the GST rejig in correlation with reduced interest costs by the RBI rate cut, an income tax benefit that was given in February, and of course now the cost is going to come down because of the drop in taxes. In this space, what are the new additions, if any? I believe Ola from the internet space will also fall here.
So definitely Ola is also a new addition into the portfolio, and we have seen post TVS, it is the Ola's, Ola is seeing good traction of late, and with new addition into onto the product side, we believe that losses are going to narrow down in future. And obviously the stock has hit a rock bottom levels from its IPO listing. So we have seen a very, very big correction post its IPO, and now I think there's a very strong price stability which is getting reflected into last 15 days of price volume action which is there in Ola. So I think this momentum of price action could continue at least from a medium term perspective. And during this period, if there is any significant improvement in terms of business performance, then I think this can continue in future as well. But yes, we can say that Ola is more as a tactical bet rather than as a complete buy and hold. We need to watch out coming few quarters as a trend whether the business momentum is improving or not. So we can call it as a tactical bet, at least from a shorter term perspective.
Okay. Ashish ji, what has happened, what has also happened is that the markets rallied very sharply in March, April, May, June. These 4 months saw the Nifty rise 17%. And then, of course, a bit of profit booking in July as well as August. Did you use that opportunity to exit some counters? Have you booked profit substantially somewhere, or does it remain buy and hold for the PMS?
No, definitely we are a combination of buy and hold, and we can say the tactical allocation in terms of our portfolio. So we had a very good allocation in our portfolio to defense as a theme, and we have been very vocal about that theme. And tactically, we booked the significant portion of our defense allocation somewhere in the month of June, July, and these stocks have also seen good amount of correction in the last 3 months time frame. So at an appropriate time, we might even look to get entry into these space, because the interesting part is it is more a structural theme from a longer term perspective, because of the kind of government focus is there and the kind of make in India and indigenization which is taking place in these companies. The order book flow, order book momentum is very strong. Book to bill ratio for a lot of these companies are in the range of 5 to 8 times. So that gives us a very strong revenue visibility. But at times these stocks become very expensive because of the short to medium term price action, and that's where we try to book our gains. But at lower levels, at some point of time, this will look interesting, and that's where we might be interested to get entry into the stock. But yes, at higher levels, we have booked significant amount of allocation we have reduced in the defense space. Same is the case with the entire power and the renewable space, where we have reduced our significant allocation at this point of time. So you can say that the most of our themes at this point of time are reflected towards domestic consumption and domestic related themes and manufacturing.
Okay, fair point. That's a fairly logical description of how the portfolio works. Ashish ji, two spaces I would like our viewers to hear your views on. One is defense, where the momentum seems to have ebbed out. These are now stocks that are have corrected anywhere between 25 to 35% from most recent highs post Operation Sindoor. Is there a tactical call in your PMS on defense either way? And two,
Yeah. Am I audible? Am I audible?
yes, yeah, you are.
Yes. Okay. So as I already mentioned, from a longer term perspective, the structural trend of defense looks very promising because of a very strong order book to bill ratio, a very strong inflow of new orders from different agencies, and with government focus on the entire space, and with a lot of indigenization, we believe that structural trend of defense looks good. But at times, since these stocks see a very strong price behavior in 2 to 4 month kind of time frame, the valuation becomes a little expensive, and that's the time we need to book some gains and wait for a right opportunity to get into it. Now, since these stocks have corrected reasonably from its all-time highs, and we believe that at these levels the risk reward looks promising, but just we don't enter basis the risk reward. We also want to see whether the price action is going to be very supportive in the medium term or on a tactical basis, and that's where we are still not on a wait and watch approach for a lot of these defense stocks. But yes, we are looking these stocks from a positive bias at current juncture, but for the fresh entry, we are waiting for some kind of fresh signals to come into this space.
Okay, fair point. Ashish ji, one long-term sector that we have avoided in terms of discussion and investments is classical FMCG, the likes of Britannia, Hindustan Unilever, Nestle, Godrej Consumer, Marico, Dabur. All these are direct beneficiaries of a potential GST rejig. Is there value somewhere in this sector which is getting reflected in your PMS, or are you staying away?
So, Shalji, we are not betting on FMCG per se, but definitely we are very positive about the entire consumption as a theme, and we want to play the consumption through consumer durables, through auto as a theme, which is also going to be a beneficiary of the consumption boost, plus the monsoon. A good monsoon could be a big trigger for these stocks to rally. So, as we have mentioned, AC penetration is going to increase a lot, and that's where companies like Amber, Blue Star, PG Electroplas. These are the companies which are going to be big beneficiary of this trend. EMS as an entire story is also a good substitute for the entire import, and it is also a proxy to the entire consumer durable as a space. So we are very positive on the entire EMS stories. And apart from that, the plays like Eternal or Nika, this was also a proxy to the entire consumption theme, and that's why we are more into these kind of stocks in our portfolio from a consumption perspective. But FMCG per se we want to avoid, because the reason is volume growth is still not picking up, and the valuations are still at significantly higher levels. So maybe they offer a good risk reward at current levels, but whether they are going to outperform the broader market, that's where my doubt rises.
Okay, fair point. Are there any one-offs in your portfolio, Ashish ji? A punt that you may have taken just on the whim or a lark कि ये शेयर काम कर सकता है, 1-2% allocate कर दो, चला चला नहीं चला कोई बात नहीं.
So that's where I said we have taken a position in Ola Electric. The reason is it's more of a tactical allocation which we have taken, because the stock has seen a massive correction from the from its IPO price, and then in the recent analyst meet, the management was quite positive about the future of the company, but still the numbers are not very encouraging. But just from a price perspective, it has seen a good correction. Price stability was started. The stock started to consolidate between 40 to 50 zone, and once it gave a breakout above 50 on after this consolidation with huge volumes, that was a trigger point for us to get into Ola Electric. So that's more of a tactical bet, as I mentioned. But most of the stocks which we try to bet is more of a thesis of good fundamentals and technicals. So that's where even CDMO is in space which is looking very encouraging to us. We believe that the entire pharma industry can grow at 8-9%, but the CDMO sector can grow at 18 to 19%. And companies like Laurus or maybe Sai Life or DV's Lab, these are the companies which are posting very strong set of numbers in terms of their CDMO pipeline. And there we believe that both from a fundamental and technical perspective, they are showing strong resilience against the broader markets as well. So we have got reasonable allocation to the entire CDMO opportunity in our portfolios.
Okay, as a percent, what is the AUM as of now at JM Financial PMS which you manage, and the percentage AUM in internet stocks and CDMO space?
So see, as far as internet stock or new age themes, which include stocks like Eternal, Paytm, Nika, Delivery, Ola, all this put together would be close to 11 to 12% of our overall portfolio. The CDMO could be close to 6% of our portfolio.
Okay.
So which is both these is a significant overweight position as compared to what these stocks have in the NSE 500 as their weightages.
Okay, and which is the top position in terms of highest percentage of AUM?
So obviously, still banking and financial has the highest weight in terms of sector. So
Okay.
if one has to look into individual stocks, then ICICI Bank and HDFC Bank, these are the two names which we have had the highest allocation in our portfolio. But overall BFSI plus capital markets as a theme put together has got the highest weight in terms of sectors in our broader portfolios.
Okay, so banks is what you are looking at, and of course, internet and CDMO are also strong positions. Ashish ji, we often remember you in context of NBFCs. Given the rate cuts, given the fact that you have an income tax cut as well, and of course, festival demand. Is there anything in the NBFC space which is the center of attraction at JM Financial's portfolio?
So yes, Shelji, we have good allocation to Bajaj Twins. So both Bajaj Finance and Festive, they are part of our portfolio. And apart from that, even Cholamandalam Finance is something which we are holding in our portfolios on the NBFC side, and we want to be very, very restrictive to high quality large cap names, at least when it comes to the NBFC and the banking and financial as a space, because these companies, they are they have a very high leverages, and we don't want to we just don't want to bet on good quality promoters, and the credit quality should be good. So all this makes us believe that when it comes to NBFC, when it comes to banks, we want to be allocated more towards large cap, good quality private banks and high quality NBFC companies.
Yes, I think there's always safety in quality names, and of course, valuations of large caps continue to be far more attractive than mids and smalls. A slightly broader question, Ashish ji, your view on the Nifty as an index from these levels. We've been caught in this 1 year bind, nothing has moved. Index is well below its all time high. Uh, a view on the index maybe till March FY26 close?
So definitely, at this point of time, it's more of a consolidation phase which is going on, and we need to read it in context with what's happening in global market, where global markets are outperforming India market. We are seeing rupee sliding to an all-time low, and we are also observing a very strong trend emerging into precious commodities like gold and silver. So keeping that in context, I think from a relative perspective, broader markets are underperforming these global indices and commodities. But one thing which is very interesting is that despite all the uncertainties and FII outflows in the last 2 months time frame, Nifty has managed to sustain above its 200-day moving average, which is close to 24,000 trajectory. And my sense is in the shorter to medium term, it is going to consolidate between 24,000 to 25,500. But as you asked about March 26, my sense is we are going to hit a new all-time high by December or March time. So I think there's a good possibility of Nifty recovering towards 26,000 to 26,500 kind of zone by December or maybe by March 26.
Okay, so a new high by March 2026. This is an interesting thought, and let's hope this happens as quickly as possible. Ashish ji, a view on gold and silver, record highs. Silver now well above 1.23 lakh rupees a kilo, gold well above 1 lakh 4,000 rupees a tola. What is happening? How are fund managers such as you thinking of outperforming these very sharp rallies? 45% rise in silver prices year to date.
No, so definitely silver is looking very strong, Shelji, because if you look at from a demand supply perspective, there is a deficit in silver. Plus, there has been a very very strong underperformance of silver against gold for a very long time, and this has started catching up of late. So I think it is going to continue. If you look at the longer term chart, silver is still not reached its 2008 2009 kind of highs which it saw on in the globe on the in dollar terms. So I think there is further scope for silver to see an sustained trend, and with a lot of industrial usage and usages into EV segment or clean tech or new energy segment, there's a lot of usage of silver. So keeping this in mind, I think there's a lot of industrial usage which is there for silver, and this is also keeping the buying spree very strong in silver. And gold, obviously, because a lot of central banks are accumulating gold, and there is a kind of de-dollarization of trend which is emerging, which is also kind of pushing buying interest for gold. So both these precious metals we believe is going to outperform at least from next 6 to 12 month perspective.
Okay, and a final view that would be required is on the overall structure of the market. Indian yields are rising because of a potential drop in GST. Maybe this US tariff structure with India is also playing in the minds of fund managers. Are you worried? Do you keep yourself awake at night wondering about these problems?
No, definitely. See, we are very positive about the entire domestic themes. We believe India consumption story is going to be very, very strong. And apart from the consumption, we also believe the way entire manufacturing PLI schemes are being introduced, government support and reforms are coming. This is also going to be very, very encouraging for the entire manufacturing as a sector. We believe we are going to become 25% of GDP from manufacturing in coming few years, and if that is going to be a situation, then entire capital goods manufacturing sectors like EMS, these are going to be on the forefront. So and supported with a strong consumption story, we believe India's story looks very, very promising. Yes, where we are concerned are themes which are going to be extremely dependent on global trade. So that's where there is going to be a concern. So maybe jewelry, or maybe textiles, or even the generic pharma. This is a space where we will be little underweight, or maybe we'll try to take lesser exposure. So, but yes, from a domestic front, domestic consumption story looks quite promising.
Okay. Ashish, thank you so much for your time, and also this very practical and quality stock picking that you've shared with us, and the details of the PMS portfolio at JM Financial. We wish you all the best, and of course, we look forward to interacting with you again and again shortly. Have a nice day, sir.
Thank you, Shailesh.
That, ladies and gentlemen, was Mr. Ashish Chaturmohta, the head of equities, PMS, and managing director at GM Financial Services. Please continue watching Business Today Television. There's a lot that's happening throughout the day.